opinions of this station or any of the show's sponsors.
Welcome back, American Family Radio Network, Financial Issues. My name's Dan Seary. It's great to be here. 866-300-9298. Now, if you just joined the program, folks, just join the program in the sense it's the first time you're hearing this program. I don't usually do that. I have to tell you, I have a special place in my heart for widows, for sure. And I get so afraid and nervous when I hear someone like that has that kind of money, because I'm always afraid she's going to be led in the wrong direction. And when you're that young, you really need to secure your future. And I'm talking about your future for when you're 80, not your future for when you're 65. So I don't usually push that hard. I just knew it was a means by which I could get a hold of her and talk with her and give her some good sound advice without being on the air. And she was the perfect example of why the gift annuity is such a wonderful idea. So it was one of those perfect kind of scenarios there for that. Anyway, 866-300-9298 if you want to join the program. 866-300-9298. All the major indices slightly down, not a big deal. Negative territory. The Dow's down 4, Nasdaq's down 9, S&P is down 5. So not a lot going on. I think there's a little bit of a hesitation yesterday, and we're hearing it's very, very interesting, folks. And I know you all don't hear this, but so what I do, and I've said this so many times, I start my day early in the morning. I listen to the international news, the Asia and European news, and that's kind of how I start. And I read those papers, listening to some of the overseas networks, and that's how those that are in English, obviously. Listen to some of those before I move on to the news here at home, to try to get a feel for what is happening. We're hearing more and more, even coming from overseas, about this overheated market. Now, some are saying, well, it's not overheated. I've been saying it's overheated for a long time, and I believe it. It's got to give. But here's the main thing that I just want to point out. There is no rational reason for the market to be this high. There's no rational reason. You may be up 20%, I don't know, in your 401k, and that's wonderful. And I'm happy for you. But there's no rational reason for it unless you consider the false positive that printing money has pushed the markets up, unless you believe that is now, some might, that is now a fundamental of the economy. Now, I don't believe that, but I suppose some might. So it is, we're in a very, difficult place right now. But I'll tell you what, I can make your life a whole lot easier. If you have nothing in the market, I am not saying, let me just make this clear. By the way, 866-300-9298. Let me just make this clear. I am not saying get out of the market if you have 30, 40, 50% of your assets in the market. I'm not telling you to get out if you've got this 8 to 10 year time horizon. But if you don't have anything in, and there are so many people in the last 3 weeks that have been on the sidelines in a money market account for an extended period of time, maybe the last 3 or 4 years, that are now considering, I'm going to jump into the market. Please don't do that. It's not the time. It's just not the time. So that's what I'm saying. 866-300-9298. Let me go to Josh. Josh calling us from Texas. Hey, Josh.
Hi, how are you?
Good.
So I'm fairly young and, new to investing and savings.
Mm-hmm.
But I have a traditional Roth IRA, and I'm not super familiar with that. A traditional IRA. I'm not super familiar with that, nor the difference between a Roth IRA, but I can trade within my traditional account, And I was just wondering if you could give me some insight on that. I do already have some funds invested in stocks in my traditional IRA, and I realize what you said with the overinflated market. I'm lucky enough to be able to sit it out 10, 20 years if necessary.
Right.
But really, just the cautions and the perils of trading money. Moving money from my traditional and trading with it, and if you could give me some insight as far as the penalties to that.
Sure. So if you're able, Josh, to trade within your IRA account, there's no reason to move it in or out. So, in other words, if you're able to buy stocks, put it in your traditional IRA. Those stocks, and that's a good thing. And I wouldn't be looking to move it into some sort of other account in order to trade it and use it and that kind of thing. So
okay.
Now let me ask you something. Do you contribute on a regular basis to this IRA, Josh? I
do not. Actually, startup now and funding a lot of that from my 401k money that was in my 401k.
Okay.
So currently I don't. I plan on it once the startup takes hold and I can actually make money.
Okay. Good. So I think you're on the right track. Here's the thing. That for someone young, I've got to point out a couple of different things because this is kind of a coachable moment for all the young people just starting out listening. So here's a couple things that I want to point out to you because this is really important. So as you getting cranked up and you're starting to do a little investing in those kinds of things, understand something that if you are in the age bracket from 18 to 28, somewhere in that neighborhood, your circumstances are likely to change pretty quickly. You could get a different job. You could get out of job, find a new job. You can move. You can get married. You can buy a home. You can have kids. I mean, there are a lot of different circumstances that you're going to go through that are going to change. And it's all good stuff, but there are things that are going to happen. So what I don't want anybody to do is perceive what I'm telling Josh is something that if you're young, you need to be doing and it is something if you're young, you need to be doing, but only if you are working hard to get out of your debt, because that's first and foremost, and you are, I'm just going to assume for a moment that all of you are givers and giving back to the Lord. Be sowers of the seed that God is giving you. Sow it back into the kingdom work, and that you're saving. Now, saving is very, very different than investing. They're two totally different animals. So saving means I'm putting some money in a bank every month. I now have $2,000, $3,000 in there. It's saving. It's not making any money, but it's totally liquid. I can get to it. I can draw it out anytime I want. So when my transmission blows up, I can fix it by drawing this money out without having to use a credit card. It's what's going to keep you out of debt. Now, that becomes a little bit more important and growing a little bit bigger when you're married, have a house, or whether you're single, have a house, because now you've got more responsibilities in the sense that things in the house could go wrong as well. So I want you to make sure, and I say this to everybody, I'm not just saying this to Josh, I'm saying this to everybody, you got to have savings. That's really important, and you need to be working on getting out of your debt. So I'm going to assume for a moment all that's in check. You're working on that simultaneously with your investing or whatever. But that's a part of your thinking. Secondly, that when you start to invest, Josh, here's the thing. If you get consistent, that's why I asked you if you were going to start putting money in on a regular basis. If you were to pick, so you say you own a few stocks right now, that's great. But here's the caution that I give you, is that the companies that you own, the stocks that you have, of course, I want them to be biblically responsible, but I also want them to be good, solid companies, big companies. Now, when you're young, you got a whole bunch of friends, that are telling you, well, I'm buying this new startup tech company and it's going to be the next, it's going to be the next Microsoft or next Apple. It's going to be, and I'm going to make millions of dollars and all those kinds of things. That's fine, but there's a lot of risk associated with it. And as young people will likely do, they gravitate towards the things that they like or care about. Now, I've tried to encourage people to forget about what you like, care about, and would like to do. Think about your retirement. So, yeah, there's nothing really exciting about ConocoPhillips stock. I mean, there's nothing exciting about it, but it'll be very exciting someday, 30 years from now, if you were continuing to buy it and put it into your portfolio. Ford Motor, Goodyear Tire. I'm just talking about a couple things that are on my list, on my buy list this week. So they're not real exciting kinds of things, but they're things that are going to grow, be steady. They're not going to go bankrupt. They're not going to go out of business. They're not going to have this monumental crash that they may never recover from. I mean, they're companies that are going to continue to plug along no matter what happens. So I would say to you, if you have some good, solid companies that are diversified, you don't need a lot, Josh. If you had 3 or 4 that are diversified. So if you had, I'm making this up now. These are stocks. Some of these may not be on my buy list. But if you have Aflac, if you had Wendy's, if you had Lowe's, and if you had ConocoPhillips, there's 4 companies that are in very, very different segments of the economy, and that's really good diversification. So let's just say you had those 4 companies, and you were, you're putting money in your IRA every month or as often as you can, and every once in a while you're going to look and you say, well, I got, I got $1,000 in there, I got $500 in there, and you buy one of those 4 that is down. If one is down or one that's not as up, maybe as much as the others. And you just continue to rotate and do that. You'll be fine. You'll have more money and you know what to do with if you can continue that discipline when you retire. Now, the difference, Josh, between the traditional IRA and the Roth, traditional IRA, you get a tax deduction for the money you put in there. But the money grows tax deferred. You don't pay tax on any of the money until you withdraw it. So someday when you retire and you draw $500 out, you're going to have to pay tax on $500. The Roth IRA, which I like better, the Roth IRA grows tax-free. You don't get a tax deduction for putting the money in, but it grows tax-free. And when you withdraw any amount of money from that, it's tax-free. There won't be any taxes due on it. So it could grow, you could get $1 million in gains in a Roth IRA and you'll never pay tax on that money. So that's the big difference. I would prefer you to do what you're doing with your IRA, only in a Roth IRA. Now, depending on how much money you have in this traditional IRA, when you move it over to the Roth, it's going to be taxable. There won't be penalties. They won't penalize you on it, the 10% penalty, but you're going to have to pay the tax on what you have. So this may be a good year to do that because your income may be relatively low. So as you get cranked up next year in another job and just shift it, just change it over to a Roth IRA and pay a little bit of tax. So does that help you?
Absolutely.
Good.
Absolutely. That gives me a lot, so I appreciate it.
Good. Thanks, Josh. I appreciate the call. Glad it helped.
Awesome. Thank you.
Sure thing. 866-300-9298. You're listening to Financial Issues. My name's Dan Celia. We're going to get back to the phones after the news. We got one line open, 866-300-9298. I don't want to take a call right now because we're right up against the break. I don't want to cut you off. But right now, the Dow just turned positive. It's 9 points away from being 16,000. It's up 14. So just turned positive. We'll see how it goes. It looks like we're getting some not so good economic news coming through the headlines right here, but looks like there are more financial companies laying off people. That's not good. So some poor earnings reports, but the markets don't seem to be too concerned about that. You're listening to American Family Radio Network. We're here every day at this time, folks. I want to remind you all, would you go right now during this break? AFR.net, click on Operation Christmas Child. Take advantage. Get that shoebox together and get it delivered this week. Operation Christmas Child, or go to SamaritansPurse.org and find out what you need to do.